एक जिम जाने वाला बंदा तुम्हें जिम जाने के लिए कभी जज नहीं करेगा, और एक कंटेंट क्रिएटर तुम्हें कभी कंटेंट बनाने के लिए जज नहीं करेगा, और एक ट्रेडर कभी तुम्हें लॉस में ट्रेड देखते हुए भी तुम्हें जज नहीं करेगा। पॉइंट ये है, जज तो तुम्हें वो लोग करते हैं जो खुद लाइफ में कुछ उखाड़ नहीं रहे होते, कोशिश नहीं कर रहे होते। मैंने बहुत सारे क्रिएटर देखे, एक हेट कमिंग, दो हेट कमिंग, नहीं करना, क्विट, बहुत ज्यादा हेट आ रहा है, पर यही तो मजा है यार, दूसरों को गलत प्रूफ करना। 100 लोग हैं, 100 में से 50 तो बेवकूफ है, सिर्फ जज करने बैठे, बस कीबोर्ड में ऐसे टाइप करते हैं, मजाक उड़ाते हैं, अपने दोस्तों में मजाक उड़ाते हैं, बस यही काम है उनका। आज तक मैंने नहीं किया। और हर वो बंदा जो लाइफ में खुद कुछ कर रहा है, एफर्ट डाल रहा है, कोशिश कर रहा है, उसके पास इतना टाइम ही नहीं है यार कि वो दूसरों को जाके हेट फैलाए। वो अपने सक्सेस, अपने ड्रीम्स में इतना बिजी है। तो ये बात समझ लो, जो भी बंदा तुम्हें जज कर रहा है वो खुद लाइफ में कुछ नहीं कर रहा है। डोंट फियर जजमेंट। फालतू है वो लोग जो तुम्हें जज कर रहे हैं, आपस में बातें बना रहे हैं। तुम लोग अपना काम करते रहो, अपने गोल्स पर फोकस करो और उन सबको गलत साबित कर दो।
Today, you're going to be learning a step-by-step scalping strategy. Step one is actually about understanding market structure. It's very important to understand what the trend is doing, and for the scalping system, we're going to be using the 15-minute time frame to understand our order flow, right? Essentially, market structure is what enables us to understand where the market is heading to next. So as you can see right now, as I'm marking up previous lows and highs, you can see price was in a nice level of a uptrend. From that point onwards, price started to consolidate between the trading range that we had. We have a low right here, and we have our high up here. That is what's known as a trading range. That's essentially the most recent low and the most recent high. So whilst price is essentially making higher highs and higher lows, we would have been expecting price to continue moving higher. However, as you can very clearly see, price actually broke down and broke the low. This is known as a change of character. Many of you already know this concept, but the change of character is essentially where price is trending in one direction before it eventually changes character. And by that I mean shifts from bullish to bearish, or it can be the other way around, from bearish to bullish. So essentially price had put in a change of character to the downside, and that left us with a new structural low. So if we map that out as our new structural low, essentially let's pull price back and say this is the only picture you have, right? This is the only picture you have. So price was in this huge uptrend, as you can see, and price is now shift and price is now bearish. Essentially what we have now is to understand points of interest. So what we look for after we've determined our structural bias, now we understand that because price has shifted lower, we're expecting what? Lower prices. We're essentially expecting price from anywhere inside this price range to move lower, but not before we've run liquidity. What do I mean? Let's take a look at where our liquid areas are, because this is step number 2. So first time there was an area of liquidation was up here. Essentially what you can see is the run on these highs right here, that's a liquidation. So we've already taken an area of liquidity. Another piece of liquidity we had in here, trendline liquidity to the upside. That liquidity was traded into. So liquidity liquidated, liquidity has been taken. And then what started happening? Well, we started building relatively equal lows in this region. Liquidity, price reacts to the liquidity, and then the liquidity was taken. So at this point, pretty much all the liquidity has been taken, other than what? Other than the liquidity that sat in the range of mitigations up in this price range right here. So the continual mitigations of areas of supply or demand build up areas of liquidity. So when price taps into this area, what it's actually doing is it's pooling the liquidity. It's running into and tapping into the pool of liquidity that sits there to be able to fuel the move to continue to the downside. So essentially we continue playing out, and I actually want to keep on the Asian session range for this, because as we know, Asia highs and Asia lows are a huge pool of liquidity. So let's essentially look at playing price forward. So price plays forward. What have we just done right here? We've created what? Relatively equal highs, right? But not only are they relatively equal highs, that's also the Asian session high, which we understand has a huge pool of liquidity. Every high and low of a session range has a huge pool of liquidity. So with that said, continue playing price down. Asian session range expands. Now, as soon as the Asian session finishes, this is something you'll see time and time again, as we'll see right now. The Asian session finishes and it liquidates. We finish into a liquidation. So typically speaking, when the Asian session time finishes, you will see a liquidation of one side or the other. And then oftentimes, at least a test of the equilibrium. What do I mean by that? Look, we run the Asia session highs, we come back, we test the equilibrium. We run the Asia session lows, what do? We come back. Why? To test at least the equilibrium. So this is something that does typically play out at least 2 out of 5 times in the week, sometimes more. So it's a probability then that we run these lows and test the equilibrium. Another potential of this is running the lows and running the highs. This is something you'll see more when you're inside of a range in of itself, like this is. So essentially, continue playing price forward. We've created what? Liquidity on the buy side. We have equal highs up in here. We have the Asia session highs, which we know is a huge pool of liquidity. And we've just liquidated the Asia session lows. We've also liquidated the relatively equal lows that were sat just below the Asia session. So after doing that, we understand, because of liquidity, price seeks liquidity. That's its role. So if we've taken the liquidity to one area, what are we likely going to do? Take the liquidity on the opposite side of the market. And once that liquidity is taken, typically you'll see price reverse again. So once price takes an area of liquidity, it will move to the other side of the market to facilitate more liquidity. It's just that simple. So when we see now a run of these highs and you start piecing the puzzle together, when you see that we are structurally bearish, when you see that price is coming for a complex pullback, and then when you see an area of liquidation, then we're going to be waiting essentially for our entry model. So if we just continue playing price forward, price does what? Price runs directly into this pool of liquidity right here. So after price seeks liquidity to the top side of the market, what can we then do? We can then look at going to the 1 minute time frame to look at our realignment. We can look to essentially get involved in the market, taking out what? Taking out the 15-minute lows. Because again, if we just go back to the 15-minute for a second, we understand that we are bearish. So we are expecting lower prices. We have a high, we have a low, price is pulling back. We're expecting a lower low to be taken out of this low down here. So we're expecting a lower prices. Not only that, if we actually go to the higher time frame, if we go to the 4-hour time frame, look how overextended we are, right? Look at the 4-hour time frame. We are heavily overextended from this low to our most recent high. So a pullback, we were already waiting for a pullback anyway. Something that we've been waiting for in our community for a while. As soon as we essentially have taken out highs in here, we understand now that liquidity is to the downside. So we've been waiting for this pullback. How did we confirm the pullback? Well, when the 15-minute shifted bearish, that was our confirmation that the 4-hour was now pulling back. So we have structure on the 15-minute, confluence number 1 is now bearish. So we're looking for shorts. Confluence number 2, we're overextended on the 4-hour time frame. We're looking for a pullback. Confluence number 2. Final confluence, we've just taken our areas of buy-side liquidity, and more specifically, in the present moment right now, we've taken the sell-side liquidity, and now we've taken the buy-side liquidity. So we can essentially now, at this point, look at playing price lower. So with that being said, we can go to the 1 minute time frame and look for our entry model. Now, typically speaking, what you will see is whilst the 15-minute is pulling back, the 1 minute time frame is going to appear to be bullish. So if we mark out our 1 minute structure right up until this point right now, essentially let's mark it out with a highlighter. We take low, high, higher low, higher high, lower low. So price makes a lower low right here, and then price changes character, higher high. So we become bullish, higher high, higher low, higher high. So as it stands at that moment right there, the 1 minute is bullish. What we need to see is an order flow realignment, meaning the 1 minute to shift and become bearish, aligning with the 15 minute. Because what essentially happens is when the 15 minute is bearish like this, when the 15 minute comes back to clear liquidity or to mitigate a point of interest, on the way up, the 1 minute looks like this. And we need to see the 1 minute shift like this so that we can align the 1 minute into this one. That is called multi-dimensional market structure. If you don't understand that, we have plenty of videos on market structure that you can go and watch. With that being said, essentially, we understand that this is our most recent low and this is our most recent high. So that's our trading range, right? Because we've just had a break of structure to the upside. And if we break this low down here, right, which we've just done, and close the body, that is a change of character. So now it's official. Price is bearish. So immediately you can look essentially at shorting, but in said situation, you may want to wait for a double confirmation. A double confirmation is essentially where we change character, we pull back, and then we flip again. And the flip, the break of structure that comes afterwards, gives you the additional confirmation that price is essentially continue bearish. So what takes place? Price changes character, we come back up, we come back down, and there is the flip. And so there is our break of structure internally on the 1 minute time frame. And that essentially gives you the ability to get involved, right? And let's say, you know, this is essentially where you take the entire supply range that just caused price to go lower. Let's say you do take this. And where you're targeting, quite simply, your just main target is going to be the lows down here, right? So 6R, it's more than good enough. Typically speaking, we aim for minimum 5R. And then essentially after this take profit right here, we're going to look at areas of higher time frame demand or supply that price could potentially react from. So where is one of those that we could look for? Well, we have this sell to buy range right here. So there we can understand that anywhere before this range of demand, we just have imbalance. So it's highly likely then that price is going to move and gravitate toward this to collect the orders. So having that as a second take profit after your partial profit at the 15-minute low, taking off 80% at 6R, you know, banking profit, that's essentially where you can look to target. So if you play price out, what you'll see is price tags in, price flips again, price comes back up, and price starts to melt again. Now let's say hypothetically you didn't get into this because you didn't see it, or you didn't understand it, or because it was very simple. Let's say you wanted to see something more convictional, right? Even though we have a specific trading plan that we follow every single time, let's say you wanted to see something more convictional, or you wanted to scale in on your positions. Let me show you. What have we just done? We've pulled back up, mitigated, pulled back up, liquidated the highs, and then we've just broken structure again with momentum. Take your newfound supply range. You can go to a 2-minute or a 3-minute time frame to what? To refine your entry. You can use the entire supply range if you need to, depending on if the risk to reward is there. Remember, we need a minimum of 5 risk to reward. Let's say hypothetically you make it a 5.5 pip stop and you take out the lows. Now it's only a 4.45 risk to reward. What do? You bring it to a 5R. Minimum is 5R. Statistically speaking, with a 30%, 40% win rate, you can be extremely profitable on 5R. So again, back to the 1 minute time frame, price has just flipped over again. So we play price out. Price moves up. Price hasn't broken the lows. It still respected them. So this is still valid. If price had just broken these lows, we do have a break of structure, and now we'd be looking at shorting from here. But because price hasn't done that, what do we have? We have a perfect area of liquidity. Why? Because it's a weak high. This high failed to break this low. It's simple, it's universal. The principles go through all the time frames. So what does price do? Price sweeps the highs as expected, and then begins to take out the lows. Now, let's say at this point, right, you're already at break even, you can scale in again. If we pull this out here, where can you scale in from? Until price hits this take profit right here, everything is valid. So, new order. From this area, stop just above. Is it 5R? Again, it's 3.68, so what do? Make it 5R minimum. If you miss it, you miss it. Your rules are your rules. And then you play price. Okay, and then as soon as price pulls back and breaks structure, you can move your entry to where? Your newfound area of supply, if the risk to reward is there. 4.4. Make it a 5 pip, make it a 5R minimum, and then you're not going to get in anyway. And then price hits take profit. The moment that price hits that take profit level, this order gets removed instantly, and you have 6.2R, 5R, and that is essentially the entirety of the scalping system.